Welcome you all, friend. Before we start the meeting, I request everyone to please raise for Institute motto followed by national anthem. तब शुभ नामे जागे, तब शुभ आशीष मांगे, आए तब जय गाथा, जन गण मंगल दायक जय हे भारत भाग्य विधाता, जय हे जय हे जय हे जय 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 हे भारत माता की। Please sit down, everyone, and request everyone to please keep your phone on silent mode. Welcome again, friend, and happy Diwali to all of you, along with Happy New Year. Friends, ऐसे आज का दिन तो सेलिब्रेशन का दिन है, लेकिन सेलिब्रेशन के साथ में अगर ज्ञान का जुड़ाव हो जाए तो सेलिब्रेशन का मजा भी दुगुना हो जाता है। इस चीज को ध्यान में रखते हुए जो हम सीए और एक प्रोफेशनल का एक बेसिक पर्पस जो होता है, जो स्टडी सर्किल जिसके लिए बनाई हुई है, वो भी हम इसमें पूरा कर रहे हैं और इंटरटेनमेंट के लिए हमने एक फैमिली गेट टुगेदर भी रखा है। तो सबसे पहले हम नॉलेज की बात कर लें। आज का हमारा सब्जेक्ट है क्रेडिट रेटिंग, हाउ टू इंक्रीज क्रेडिट रेटिंग इन स्मॉल एंड मीडियम इंटरप्राइजेज। You know very well in today's scenario, small and medium enterprises को लोन मिलना बहुत ही कठिन हो गया है, क्योंकि उनकी क्रेडिट रेटिंग बहुत कम होती है। उनके लिए एक बड़ा चैलेंज होता है कि हाउ टू इंक्रीज एसएमईज क्रेडिट रेटिंग। और इस पर गाइड करने के लिए हमारे साथ में सीए संजय जी अग्रवाल एंड सीए दर्शन जी शाह मौजूद हैं, जो आज आपको बताएंगे कि हाउ टू इंक्रीज योर क्रेडिट रेटिंग इन एसएमईज। नाउ आई रिक्वेस्ट आवर डेप्यूटी कन्वीनर सीए ललित बंसल जी to give a brief profile of our speaker before you.
Thank you, Karan. Good morning, happy Diwali, happy New Year to you all. Sanjay ji is a senior director at Ratings. He is currently head of BFSI rating vertical of KLS Ratings and is also part of various initiatives and forums of rating vertical. Sanjay ji has over 3 decades of experience in credit rating and financial services. In credit rating, he has managed assignments on banking, financial services, large manufacturing, and services corporates, MSMEs, government, and regulators, etc. He has held prior role at advisory division of CARE, where he handled privatization, valuations, public-private partnerships, and corporate credit risk management. He has worked in domestic and global corporate credit risk vertical of ICICI Bank. He has also worked in project finance and investment verticals of IFCI Limited and as an article clerk in Lodha and Company, Kolkata. Sanjay Agarwal ji often sought out by media outlets for his insights on the capital market, credit market, and banking sector. By education, Sanjay ji is a chartered accountant with all India ranks in intermediate and final examinations. He has cleared level 2 of FRM and also qualified the final examinations of erstwhile Institute of Cost and Works Accountants of India. With this, let's welcome Sanjay ji and welcome with a small token of appreciation from the leader.
Now,
let's welcome our second speaker of the day today, Darshan Saji. So, just giving a brief intro of Darshan Saji. Darshan Saji is a chartered accountant and has successfully cleared all 3 levels of CFA program. With over 14 years of experience in the banking and financial services industry, he has worked extensively in credit analysis and risk assessment across lending credit rating agencies and banks. His expertise spans corporate credit evaluation, financial statement analysis, and regulatory compliances. Beyond his professional achievement, he has actively led and organized cultural and religious campaigns in India and abroad, reflecting a strong commitment to community engagement. CA Darshan Saji is a group head, MCG Group Care Ratings, will make a presentation on credit rating challenges for SMEs along with CA Sanjay Agarwal ji, Senior Director. Which will that will be followed by question and answer. So let's welcome Darshan Saji with small moment of remarks.
now I request Mawar ji to come.
Good morning, everybody. Happy Diwali and Happy New Year to all of you. So nice to see that on such a busy day of social and family life, you have come by this morning to gain some knowledge. What is Sanjay? लेकिन अगर स्टडी सर्कल से मैं वैसे तो जुड़ा हुआ नहीं हूँ, बट मेरे काफी दिन के करीब है विजेता जी, उनकी वेरी क्लोज टू अस, so and very long period like 44 of the founders, so I will not really try to know everything. So I keep hearing about digital studies for the moment. When he asked me to take a session on accreditation, I thought it's very nice. मुझे SME का ज़्यादा कुछ मालूम नहीं रहता, but I look after clients and fights. So I requested person to accompany me and resolve the issue. There is one thing I would like to clarify. Kailash has said that the session is to educate people how to increase credit rating. तो credit increase नहीं करवा सकते. आपको उसमें क्या issues आ सकते हैं और क्या ध्यान देना है, that should be objective community आपके पास करें. And the core thought process of the presentation is that many of us are advisors and people working with MSMEs, and some of us are proprietors and people who actually own to some things. So we may have certain issues, so whatever are the case studies we have, on this session we take you through all of them. If you have any expectation of the day, we probably can take it up. Or we can take it up during the question and answer session. Okay. Thank you. I'll hand over the stage to Darshan, the guide you on speaker. Thank you.
Thank you, sir. Thank you and warm welcome to all of you. So to begin with, सर ने जहां से बात खत्म करी इंट्रोडक्शन से पहले, वहीं से मैं शुरू करता हूं कि आज का सेशन इज फॉर सेलिब्रेशन एज वेल एज फॉर ज्ञान. और आज के दिन को काफी कम्युनिटी में ज्ञान पांचम, लाभ पांचम बोलते हैं. तो हम लाभ भी ले रहे हैं और ज्ञान भी बटोरने का ट्राई करेंगे. And I'm really very much thrilled and honored to have this opportunity to present a few things, share some knowledge points with you, fellow members of our mother institute. And it will be one of the rare structured learnings, because I am in job, so we are bound to comply with CP requirements, but those are majorly unstructured ones. With this, I would like to begin the presentation. So, for MSMEs, generally, the thing is that they face a lot of challenges in terms of when they approach us for rating purpose. Although they are quite vital and very much important to the economy because they create millions of jobs, they encourage entrepreneurship, right? They significantly contribute to the GDP. And still they face some challenges in terms of getting good ratings. And where they are stuck up, generally, even if we try to communicate, they may have some difficulties to digest that because they want to focus on their business. They are more concerned about their business, how to do it. But how to do it in a structured manner, organized manner, probably that aspect is missed out because their focus is different. But as a consultant, when you people are involved, you can guide them in a way that these kind of constraints may hinder the rating. So today we have identified a few topics of discussions wherein we will begin with difference between credit rating agencies, credit bureau, and B2B data. Then Indian CRAs versus global CRA, regulation in Indian CRAs, Then briefly we will touch upon about Carriage, our company. Then risk assessment framework, which is vital. It is a methodology which is taken care of while doing the entire rating process. Practical challenges faced by MSMEs during the credit rating process. Then policy on default and rating performance. And finally, Q&A. So there you will have, probably after this session, you may have certain questions, so that we will take care of. I know that we will be dealing with, today's session is more like B2B, wherein people in front of me are quite learned, experienced, but this data consumption is for B2C, right? When you will deal with your clients, they may have some layman sort of mentalities, especially with MSMEs. So we will try to make it as usable as possible so that it helps you to make your clients also understand that this is the difference, these are the challenges, this is the way which rating agencies are looking at the business. So accordingly, we should be improvising. Generally, people may have some sort of confusion. What is the difference between rating agency, credit bureau, and B2B data analytics firms? So major function of a credit rating agency is that we evaluate corporate credit worthiness, whether the loan taken by the entity, they will be able to service it in a timely manner or not, whether there will be any default chances or not. Whereas credit bureau, such as CIBIL, Experience, Equifax, Prefimark, what they do is that based on their client's repayment track record, they create history, they maintain that history. And B2B data, they do business risk assessment. So in order to give better understanding, to credit rating agencies, you are quite aware of CARE hai, CRISIL hai, ICRA hai. There are others, total 8 credit rating agencies which are approved by SEBI as of now. Credit Bureau, जैसे बताया, CIBIL, Equifax, etc. And B2B data, we have heard a lot of things about DNB, Dun and Bradstreet. So these kind of firms undertake B2B data analytics process. So who are what is the key output of all the 3 organizations? So we provide rating and it has scale of AAA to D with various subcategories of it. Credit Bureau provides credit report, which is a very comprehensive one. It details about each and every loan taken by the entity or an individual. And according to their repayment capability history, they assign score to them. And that score helps them to deal with bankers in order to take further loans. So their output is in the form of score. And B2B data like DNB, they provide either paid X score, which is a score which gives them, which helps to assess how much timely the entity is in repayment to their suppliers. Their timeliness, their overall business function, that is evaluated, and they provide DUNS number. DUNS number is a unique one, whereas paid X score keeps on changing basis their repayment track record. And users of these 3 kind of information. So for credit rating, it has a wider and wider scope because it is useful in economy as a whole. The users are investors, regulators, lenders. And recently, yesterday's news, it was that a European Union credit rating agency, namely Scope, has downgraded US's issuer rating and long-term debt ratings from AA negative to AA minus stable. So in fact, such credit rating agencies take actions or take calls on sovereign rating as well. So that we will see. Credit Bureau is consumed mainly by lenders, banks and NBFCs, and B2B data is for each and everyone who wants to deal with a particular customer or a supplier. So whether what the credit worthiness, in order to ascertain the credit worthiness, how the promoters are or how the business is. So based on the score, the paid X score or DUNS number, they can verify the same. So now we will move towards some more specific things. This was a broader thing. Now, if we want to understand about the credit rating agencies, so there are 2 sort of credit rating agencies from our perspective. One is Indian, definitely wherein we are living, and one is global. So here the credit rating agencies are regulated by SEBI as well as RBI. SEBI has direct regulation. RBI has indirect control over Indian credit rating agencies, whereas global rating agencies, it depends on where they are domiciled. In a way that SEC is there in USA, ESMA is there in European Securities Market Authority. So they generally work like SEBI in their respective regions. Indian credit rating agencies, can we take it at the last so that
No, I just wanted to know before ILFS and Diwan Housing fiasco, because there was a triple A rated in June and September become B. Similarly, Diwan Housing. So whether that brought some additional, regulation for rating agencies?
Correct,
Or
correct.
change from the behavior of the rating agency, approach giving rating to the corporates.
So it has certainly brought very crucial changes in terms of compliances in a way that the regulators have become more vigilant, wherein we have to adhere to various compliances which they have issued post that. And we have to be much more transparent in our documentation, much more transparent in our process. And audit also becomes a very, very crucial thing, that regulator comes and audits, they find any queries, any observations. So even if it is minor one, it is escalated to the highest level and we have to give proper justification to that. So this has happened. And in some of the cases, through RBI's indirect control, which I said, so they have suspended the license also one of the credit rating agencies, directly, indirectly related to such non-compliance things. So yes, we were talking about rating agencies in India. So there are various, I said that there are 8 rating agencies, and internationally, globally recognized, there are 3 mainly: S&P, Standard & Poor's, Moody's, and third is Fitch. So here I would like to highlight one thing, that in India, let's say if I talk about CRISIL, so it has some backing of S&P. ICRA has some backing of Moody's. India Rating has backing of Fitch. Whereas we are proud to say that CARE is indigenously grown credit rating agencies without any backing of any international rating agencies, and we have proved our excellence in various sectors as well as in sovereign rating also, that we will try to touch upon at a later stage. And rating scale, something is different in INR in Indian terms, and something is different for international. Moody's has some different scale, whereas in other subcategory there are some variations. Otherwise, broadly rating scales are the same. In India, SEBI and RBI are 2 direct and indirect controllers. And what key rules that Sir has also highlighted, that something has changed. So if I have to note down some critical things which are relevant for our credit rating agencies, that we have to have mandatory registration with SEBI, which eventually has some control with RBI also, in a way that RBI also participates in approving a rating agency's license. Transparent methodologies. Methodology, I mean to say that how we carry out the rating process. So if you go to our website, so there you will find a section on methodology, wherein how manufacturing is rated, how textile sector is rated, how pharmaceutical is rated. So there is some stipulated criteria which we have to disclose and we have to adhere to. Then periodic review is compulsory. As you know that within 12 months of period, we have to carry out a surveillance process. And in that process, if the client does not cooperate, we have to come up with a press release also. Disclosure of conflict of interest, in a way that our key members, our committee members, our analyst team, whether they have any vested interest in the entities being rated by them, that we have to disclose. Code of conduct compliance is there, wherein as we may have some possession of information which is UPSI, and public sensitive information. So we may not, we are stipulated that we cannot participate in the equity market activities unless and until it is approved by our internal team, our compliance team. So even if I feel that a particular stock is doing good, let me invest, I cannot do that because I may have some UPSI. So I have to first seek an approval from my internal compliance team, then only I can do. And press release and rating report. Press release is in order to simplify, press release is the outcome, a summary outcome of entity which we have rated, and it is giving the rationale that what are the basis of giving this credit rating to an entity. And rating report is a detailed one. Press release is available to each and every person, every investor, every regulator, whosoever wants to access. Rating report is a more sensitive version. That is why it is not available to everyone. It is a paid version. With this background, we will move to briefly introduce about our company, that is Carriage. So Carriage is a group wherein Care Ratings Limited is a parent entity. It holds various multiple entities under its umbrella. And at Carriage, we have a host of services. We provide analytics and advisory services also, wherein you might have heard the TEV report. At the time of launching a new project, the company carry out TEV report, we provide that. We have ESG vertical also. Carriage Global IFSC Limited that I was talking about, that we have done some sovereign rating. It is located in Gift City, Gandhinagar, through which we carry out sovereign ratings also. We have a branch in Africa which takes care of South African credit rating assignments, and the other one is Nepal. We have one entity at Nepal. And as on June end, as per the latest available, I'm going through the publicly disclosed investor presentation data, wherein we have market cap of around 4,800 crore, with major investors are mutual funds, foreign portfolio investors, and domestic ones also. So here I'll come to now one of the critical aspects of today's presentation, that is rating assessment framework. So what is rating assessment framework, which I talked about? Methodology. So any credit rating exercise is built upon mainly 5 pillars. 4 are present in each and every entity. 5th one is optional depending upon the situation. So these are industry risk, business risk, management evaluation, and financial risk. So these are 4 key pillars. And if any entity has any projects in pipeline, so we also have to assess the project risk. So how do we assess, and what are the aspects which we take care of during analysis of various pillars that we will try to touch upon briefly. One is industry risk, wherein industry and economy related risks we generally try to assess and understand, because micro things are important, of course, but macro things are also important to any entity. So what could be those factors? So size of the industry and demand supply factors. The industry wherein an entity operates, what is the size of it? That is a crucial one, because the larger the industry, the probably they have multiple options to scale their business up. And the other way around also, if the industry is small, but the entity is, let's say, having oligopoly or duopoly kind of a situation, they may have some additional edge on their business. So that kind of assessment we have to do. Price trend, investment plans of the major players in the industry. So price trend in a way that the product in which the company is dealing, how the fluctuation of at the industry level of that product and the raw material also. So how the industry is behaving in the products in which the company is dealing, as well as the investment plans of major industry players. Let's say if I talk about on a broad level, if I talk about paint industry, earlier it was doing good, Asian Paint was market leader, it is still, and suddenly disruption started because of two new entrants, right? So such kind of things we have to take care of, although the client is strong, but with the entrance of major players, what could be the implication on the industry performance, market share? So that kind of things we have to take care of. Changes in technology, international and domestic competitive factors. Change in technology, to broadly say, which is a very in thing right now, that is renewable energy. There are multiple options. Solar is there, wind is there, hydro is there. Now through hydro, there is PSH is there. which stores energy. So these kind of options are there, and which option is growing at which pace, that we have to understand, and accordingly entities will be evaluated. And I talked about international and domestic competitive factors. So recently we also had to carry out the entire review of our portfolio, which has high US exposure. Everyone is aware of the thing that because of tariff situation. So although our entities were not doing anything wrong, or our entities were doing business as usual, but because of some notification from an international side, it got impacted. And you might have heard that, or might have noticed that we have come up with many press releases on various sectors which are highly affected. Gems and jewelry, then shrimp industry was there. Earlier pharma was exempt. Then again they imposed tariff on branded pharma products. So these kind of things we have to be aware of. We have to be updated, and then we have to uh, factor in while assigning a rating to an entity. Entry barriers and availability of substitute to industry, where what kind of entry barriers it faces. And lastly, but not the least one, is the capital intensity and business cycles. So what kind of capital requirement is there? Some businesses are capital intensive. They require high capex. We can say that textile industry is there. So it is highly capital intensive in terms of installing spindles, in terms of installing other plant and machineries. Some are labor intensive. So what is the background of an entity in which it is operating? This kind of things we have to take care of. The cycles are there because some are seasonal, some are doing round the clock business. These are broad factors for industry risk. Business risk, this is the second pillar which we analyze and keep in our mind while assigning a rating. So first factor which we look at is diversification. Diversification in terms of many aspects. So first is product diversification, right? So if an entity is dealing in a single product, so probably it is prone to more riskier scenario, right? So let's say if we also talk about our industry, so we are well known for what? Auditing, accounting, and taxation, right? This is the primary thing. And now it is considered as bread butter of our profession. But nowadays people want to diversify in various other services as well, right? They want to get into consultancy, they want to get into IPO consultancy, they want to get into valuation process, etc., etc. So this is the thing which you may also correlate. There's a product diversification. Another is geographical diversification. Whether you want to do business in Mumbai only, or you want to expand outside. You want to expand outside, then with your own setup or with collaboration with others, right? These are the things which is called geographical diversification. We try to factor in during our analytical process. Another one is customer supplier diversification. Whether a company is dependent upon a single customer, then it will have more risk to their businesses. Let's say that customer suddenly tells our client that now we do not want to do business with you. We have found another supplier, another vendor. Then what happens to their business? So that is also one of the things that we take care of. We talked about seasonality and cyclicality. Agro products are there which are seasonal in nature. Some products are there which are doing business round the clock. In all the months of the year, they are doing good business, pretty well business. So whether this cyclical nature of business, how it is insulated, how it is insured in a way, if it is adequately capitalized, then promoters have strength to sustain such cyclicality, that we need to understand. Size, market and competition, earning capacity of the business, cost structure and operating efficiency. Nowadays, this is also becoming one of the major aspects of CA practice, that we try to enter as an advisor or virtual CFO or advisor for cost optimization. So this is also important for credit rating, in a way that cost structure is that which you can control. Other macro factors you may not control. Sometimes selling price you may not control, because it is market driven. Everyone is doing business and everyone is selling the same product. You cannot charge higher unless and until you convey that you have some USP on that product. But cost side is within the client's control that we need to understand. Going forward, we also analyze the financial risk. Financial risk take care of financial ratios. I will not dwell much into it because you all are expert into the financial aspects, what kind of ratios you look at, what kind of because at the time of preparation of the P&L balance sheet cash flows, you also have to disclose at the end nowadays with new norm that certain ratios are to be reported. So people are very well aware of accounting quality and contingent liability. This is one of the crucial aspects that we will definitely take a practical example on that, how it has impacted overall credit rating. Financial flexibility in a way that if a promoter is doing business with own capital, or let's say bank borrowing, in case of growth, whether that promoter or that entity is able to secure finance from other sources, they have that kind of financial flexibility or not, because sometimes with the growth you need extra capital, right? So how that will come up, whether promoter will infuse, promoters are resourceful and they will infuse, or they have strong balance sheet and P&L that they can get additional borrowing. Along with that, they have muscle to repay that also on a timely basis. That we take care of. Validation of projections and sensitivity analysis. Whatever financials we have, that is a past data. That will give you some trend, but it will not give any insight or any idea about the future operations of the company, right? How it will do. So we have to build some projections, so some assumption. What is the installed capacity? How much is the capacity utilization? So what kind of output they will generate? What kind of wastages they will have? Accordingly, their capacity utilization will be affected or not. Whether they are going to improvise their capacity in terms by way of modernizing something. So this kind of factors which we have to take care of while assigning a rating, and that we call it as projections. Generally, we call it CMA in our normal language. So CMA is also crucial because that gives us some sense on how the business is going to grow in future. Working capital analysis and foreign exchange risk analysis. Nowadays, MSMEs are export drivers also. Now many MSMEs have got involved into export business. So with export, one inherent risk comes, that is foreign exchange fluctuation risk. As far as export is concerned, in the current scenario, they were enjoying. But had the case been other way around, they are importing substantially. Then in that case, whether they are hedging or not, in case of export also, whether they are hedging or not, because we have come across certain clients, they are quite clear in their thought process. Whatever the dollar movement is, we want to hedge our exposure. Today, I should be knowing that at what rate I am selling to my customer. Let's say my price is hedged at 87. Tomorrow, if it is 88, 89, I'm okay that on spot basis I may lose 1 or 2 rupees, but my costing is taken care of appropriately. Of course, it has some disadvantages because it may give them certain notional loss, but we try to discourage the speculative behavior. Because we considered one aspect, cost structure we take care of. How a person's cost structure is defined or it is taken care of. Once you have analyzed your entire cost and you add some markup, and now you know that at what rate you want to sell, and that rate translates with export, it translates into foreign exchange also. So that's how, if it is hedged or not, that we take care of. And working capital in a way that customer is growing, business is growing, but now the business is stuck up more in the inventory. I mean, the working capital is stuck up in inventory or receivables. Then it will hamper the business process at a later stage. Another pillar is management evaluation. What is the track record experience of the management? What is the strategy to grow in order to stay relevant in the changing business scenario? Legal constitution and ownership pattern, that we will take an example on that also, how the ownership structure affects. Performance of group concerns. Sometimes a management has many entities under their common control. So one entity is doing good, but another entity is not, and they have, let's say, parent subsidiary framework. So subsidiary looks good, but at a parent level, it is not. So then that also we need to understand. Organizational structure, personnel policies, and corporate governance. Corporate governance also, it is one of the major parts we will demonstrate at a later stage. And this is an optional thing in a way. If the entity wants to go ahead with an expansion capex, then we have to analyze the project risk also. And time overrun, cost overrun. What is the project cost vis-a-vis the industry cost? In a way that you are installing you are doing business in pharmaceutical and installing a plant. So what is the cost of that plant vis-a-vis for similar product? What is the industry cost? Whether it is matching or not, it is on a higher side or lower side, that we have to look at it, because that will also define the payback period. Achievement of financial closure and status of regulatory approvals. They are planning a big capex, but still financial closure, tie up with the banks is yet to happen. Then it will pose a risk to the entity. Who will be the supplier of the equipment, their project execution capability, whether it is going as per the timeline or not. These kind of things we will definitely look at. Now, probably this is the most interesting thing. This you will have to, you may enjoy probably what are the practical challenges, because this is the thing which we need to understand so that we can also guide to our clients.
Collaterals are there. Certain company don't have a collateral. Whether trade rating changes due to company had a collateral that are offered for loan, and other company don't have a collateral to offer for loan.
For you, both of your questions, I have a practical scenario. I'm starting with the first one, who doesn't have collateral. Okay. So this is collateral based lending bias. As you have rightly pointed out, nowadays and anytime lender wants to safeguard their risk also. So they have to have, the clients has to have collateral, to offer. As the client grows, collateral proportion decreases, right? For small client, for MSME, collateral is of utmost weightage. So to give example about one of the entities which we have rated, it is an emerging player in EPC industry, plant and machinery. It is manufacturing, and it is installing at its client's end. It has developed its own indigenous technology also. So that has given it a boost in a way that business has started flourishing like anything. Within 4 to 5 years of period, their top line grew from 2 to 300 to 2000 crore. This was the pace. Now what has went wrong, or what is the thing which we want to discuss or highlight? With the growth, company faced increased working capital requirement, right? Because this is very much obvious. And EPC sector has some more constraint in a way that receivables are stuck up because of retention money, because of the dispute on their deliverables, whether it is matching the quality or not. Now, being an EPC player, they had to have mainly in the form of LC and BG, letter of credit and bank guarantee. So this was the working capital requirement. Now, what has happened with the growth? Earlier at 200-300 crores of their turnover, they had some sort of manufacturing capacity, but majority was outsourced. They have tied up with some contractors, fabricators. The same scenario persisted at the 2000 crore also. In the rapid growth, they did not invest in their factory. They did not invest in their plant and machinery manufacturing capability. So on paper, their gross block is hardly anything. But how they are able to execute? They are outsourcing this manufacturing activity. Now with increased working capital requirement, they are left with no collateral. And what has happened? They had to provide 40 to 40% margin in the form of FD in order to avail LC and BG facility. That has created further trouble to the working capital, because your FD money is there, which is you can use in your working capital and try to have better liquidity. Now it is stuck up as a encumbered FD. You cannot utilize it. What you are earning, hardly 5-6% on it, which is not meeting the inflation, and the business growth is tremendous, but it cannot be utilized. So working capital need is there, money is not there. What they did, they resorted to NCDs. An NCD with 2 years of tenure. Now the scenario is that this working capital requirement is long-term in nature, which is perpetual one. and they are replacing it with short-term facilities, relatively short-term, 2 years period with 2 tranches, 6 months of moratorium and 1 year of moratorium. I hope now it is answered properly that without working capital, without collateral, how the business may stuck up, because now it will hinder the further growth. Company has to pay NCDs of around 125, 130 crores, 1.5 and 2 years. So they have now stringent requirement. I mean, they have to generate cash flows. Otherwise, everything will go on a toss. This will constrain the rating process, because every year generating 100 crores of cash flow is not that easy, or cannot be assured in the EPC industry, because it is affected by the capex process. If the companies, because of some or other reason, stop incurring capex, then the projects will come to an halt. Correct. So that in that client's order book also, we were seeing some long-standing projects which were stuck up. So this kind of things which may create cash flow issues, there we have to be careful about it. And this is the scenario which I am explaining. But as sir said, that we cannot guide anything, but this is the thing from which we can derive something, and we can accordingly interact with the client. Second one is quality of audit report, which we discussed, that what kind of contingent liability or accounting auditing treatment affects. So indeed it is said, when I also passed out, you would have passed out, then relatives around us would have said, तुम्हारी एक साइन की कीमत तो बहुत ज्यादा है, right? That signature holds a lot of importance. Probably we may not have encountered, but in the practical scenario, how it became very much relevant and important, I'll tell you. In one of the cases, which the client was a growing player in road construction sector, getting orders from public sector undertakings, private sectors, on direct basis, on subcontract basis. So all the checkbox it was trying to tick and trying to grow. What happened? That company entered joint venture with another road construction activity. They floated an SPV. For that SPV, they provided corporate guarantee. Let's say the project was at around 1,000 crore. So both the entities provided corporate guarantee to the tune of 1,000 crores, right? Because if another JV partner defaults, one has to take care of that repayment obligation. That was a condition by the bank. Corporate guarantee, as we all know, it is a part of disclosure under contingent liability, right? Another disclosure comes in the CARO report. What is the loan taken, repaid during the year, corporate guarantee advances or revoked? Now in the audit report, what had happened? They disclosed contingent liability, but failed to disclose in CARO report. We took note of it. We presented to the committee. We presented the facts that this is the thing we have built in our projections, that this is the corporate guarantee, which may, in case of invocation of guarantee, this may come up as a liability. So what is the repayment obligation, whether DSCR will be met or not, how the company will do. Because of this, the committee took note of that. Somewhere the quality of audit report is compromised. So now let's say if it is not mentioned, whether there are certain other things which are disclosed or missed to be disclosed, we now don't know. You check with the auditor as well as the client. Now why it was missed and what are the other things? We check with both the stakeholders, and client was obviously not aware because auditor was responsible to prepare the audit report. So auditor has given us confirmation in writing that it was inadvertently missed in the CARO report, which may happen. But a mistake of auditor costed the client in a way that created some loss of trust issue in the audited financials. You never know. This is miss right now. You may have missed other things also. And we as a rating agency cannot do entire audit, right? We rely on the auditors report, auditors comments, and that's how what has happened, that the client's rating was constrained. He went for appeal also. An external member at the appeal level, they also discarded that appeal request in a way that yes, quality of accounts is of utmost importance. So sometimes this may have given we may have been given weightage, but we may not be aware of. As a CA, you might be signing an audit report, but how much value it carries in front of other stakeholders, that we may have to understand. Another one is hygiene issues and regulatory burden. So nowadays compliance issue has increased for the clients. And in one of the clients, what has happened that they have failed to comply with PF and ESIC norm. Auditor had disclosed in the audit report, provided qualified opinion. We took note of it. This client was also growing. Working capital requirement increased, but they did not commensurately increase their working capital loan, right? That is the borrowing with the banks. That resulted in overutilization. There were several instances of check return. There were instances of delay in submission of stock statement, delay in getting the stock audit conducted. So these are the hygiene issues, compliance issues. And on the top of it, what had happened in FY24, the client, the CA had given qualified report because of non-compliance in PFESIC norm. And in FY25, the client has changed the auditor. That has triggered a further red flag to us, and the rating was constrained. So these are some of the practical challenges which we are seeing and facing in our clients. Risk of capital withdrawal, which I talked about, that for partnership, proprietorship concerns, they tend to withdraw a lot of capital because that is the only business for them. But there, if it is stipulated by the covenant that this will be subordinated to the loan, or they have a crystal clear policy that this much proportion will be withdrawn every year, proportion to their profit. So that gives us some confidence that there is skin in the game of promoter, and there will not be an excessive withdrawal of capital. So these are some practical things which we come across, and hopefully this will also be the things which you might have noticed in your clients as well. So that may help you in guiding your clients also.
Yeah, and there are quite a lot of these things. So there was a question asked at the beginning of this session. So a lot of compliance regulations have come up on the rating agency. And राज्य की timeline होती है, disclosure requirement होता है, process होता है. And the course of business, especially when you are a small company, आप कहीं meet कर पाते हो. आपके पास बहुत बड़ी accounting team है या कुछ आप कर लेते हो, नहीं कर पाते हो. And उससे कई बार rating में impact आता है. जैसे giving instances, default होगा. If you are defaulting up to 30, 60 days, banks, they don't go after you, right? Only the NPA hota hai, then only the banks go after you. But in rating agency defaults for a term loan, working capital captive for which was term loan, 1 day, 1 rupee default is a default. After rating CPI. Whereas that's not a major sin or something, from a banking parlance, it doesn't impact much. Generally, there's a disclosure army rating the following by the court, social freshly, whereas the client who hasn't done that is very good. A lot of these things are there, a lot of those moral nuances have been taken care of. And the problem with rating agency rating is that आपका जो rating है वो publish होगा, और एक बार publish है तो हरदम है, आप तो निकाल नहीं सकते. अगर पार्टी में गड़बड़ हो गई तो फिर वो rating खराब हो जाएगी और फिर रेटिंग खराब हो जाएगा. And even when the things improve, then the scaling of the not being very fast. Let's say if you are a BBB rating or RP default way, so you bring the rating down to D in 1 day, right? And thereafter, SEBI requires 12 months of clear non-default stability to give it back to investment rate. Default में 18 हो जाएगा, investment के बाद में 12 के minimum लगेगा. अगर 3 महीने तक आप default free रहोगे, तो आप non की से double की सिनेरियो में आएंगे. A lot of small issues are just like small issues and documentation issues. The client is stuck between doing the business, not paying tax, getting the cash flows. But this is the most upset part. आपको long-term सोचना है. और जैसे दर्शन ने कहा कि आपने सारे एसेट ऑफ द बैलेंस शीट रखने का क्या सोचा है कि आप बैंक से borrow नहीं कर सकते. तो आपका कैश फ्लो स्ट्रीम दिखता है तो All those things are there. If you change the rating, change the trade rating, then after the response come how to improve the rating for us. So, as a client, as a or only the client ask how to improve the rating. Sometimes they tell you, okay, you change the rating so that the rating can improve and all this. So, the process for us is हमको हमने अगर किसी कंपनी की रेटिंग की है तो we can withdraw the rating only when the bankers agree. ठीक आप रेटिंग चेंज करें. If the bankers don't agree, then the only way left to us is to make it a non-confidential INC. And the rule for INC after 6 months it has to go to some security grade. आपकी रेटिंग रहेगी एवरी ईयर हम वो खाना पुष्टि करते रहेंगे उसको कभी भी सिंगल भी लेंगे वो चलता रहेगा आपको बैंकर से भी लोग दूसरी आदत की रखने आप रेटिंग की बैंकर का एनो क्या गया उसके रेटिंग एजेंसी चेंज किया और पहले वाला रेटिंग एजेंसी को ज्यादा फ्री था तो नए वाले ने ट्रिपल भी किया तो बेटर भी वैलिड और नॉट वैलिड जो पहले वाले ने जो डबल किया वो तो निकल गया ना वो अपनी एजेंसी ले लिया वो रेटिंग it comes quick. It comes. Okay, the big companies need defaulting on paying their third-party suppliers. The big corporations need defaulting on paying their third-party suppliers. Does that get factored into the credit rating agency the evaluations that we are so taking the credit ratings? There is almost a negative working capital scenario. Negative working capital scenario and defaulting to suppliers are different. We can have an agreement with the supplier that you have to send me about if you want to have more thing specifically. So that is a cash flow management. That is one question of the size of the company, all of the company in the industry. They will enable them to take this negative working capital. That's separate. If they delay the supplier, then there are many parts of the audit report where you can actually note down that there's going to be delayed and all that. So then that is how it's factored. If it's not like delaying to a bank, delaying to a bank is a different thing or a generic thing. Delaying to a supplier is slightly less worrisome.
So there we can have certain aspects in audit report. We provide aging. So there we can identify whether there is delay in supplier payment or not. And secondly, if there is a persistent delay, no, supplier will stop providing material. And every year you will see change of supplier profile. So that becomes a trigger point to check with the client why supplier profile is changing. Generally, entities do not prefer to change their suppliers.
The question is, does this materially impact the credit rating? If you see that the results are etc., then you are calculating your credit rating. And that's all. Materially impact the party rating, right? So it does not materially affect the rating. But obviously, many things move in parts, so calculation of other parts. We are looking now to the department of MHC. Basically, has to be paid in time, otherwise disclosure in there is also. So, if having weightage on the rating also. Yeah.
Yes, yes. That's what we are thinking. We have to then check with the client. And if it is intentional one or it is because of some or other reasons which is highlighted during the conversation, then it has bearing on the rating. Thank you. You have been a very great audience to listen, and I think very curious one also. तो आज के ज्ञान पांचम वाले दिन, लाभ पांचम वाले दिन, you have pointed out certain things which probably shown your interest in the understanding of the rating process. And in case of any queries, you can definitely reach out to us. Thank you very much.
Thank you, Darshan ji. And thank you, Sanjay ji, for giving such a nice presentation to increase our credit rating. Before we moving to the next session, यहाँ पर महिलाएं भी काफी हैं, और महिलाओं के लिए खुशखबरी है कि महिलाओं को सबसे प्रिय क्या होता है? सोना, गोल्ड। उनको कुछ भी मत दो, आप साल में एक सेट ला करके दे दो गोल्ड की, खुश। फिर आपको साल भर कोई तकलीफ नहीं होने वाली है, करवा चौथ हो या ना हो, आपकी उम्र बढ़ने ही वाली है। तो हाउ टू इंक्रीज योर गोल्ड और वेल्थ, इसके लिए मैं सीए अक्षत जी गर्ग यहाँ पर आना चाह रहे हैं और इनको इनवाइट करता हूँ चॉइस ग्रुप से। प्लीज सर कम। एंड इन्होंने एक स्कीम लाई है।
गोल्ड दिलवाएंगे सब।
हाँ,